The communications services sector, it's a hodgepodge of stocks with names ranging from traditional telecom like Verizon, tech giants like Alphabet, and streaming services like Netflix. And the sector is one of the top performers during the first quarter, boosted by big names like Meta and Disney. But let's talk about where there are other pockets of opportunity within that group. We're looking at how to navigate the big picture with the Yahoo Finance playbook. Joining us now is Brandon Nispel, who's KeyBanc Capital Markets Equity Research Analyst. Thanks so much for being here, Brandon. I actually want to start you off with a company that had a little bit of news over the weekend, and it wasn't very positive for it. I'm talking about AT&T with the news that a number of its accounts had information leaked. It's now scrambling to kind of reset passwords, and it's already been a tough past 12 months for AT&T with the stock down 10%. I don't think you like it, though. Judging from your most recent note on the wireless industry, you wouldn't step in here.
No, we wouldn't. From our perspective on AT&T, they're a third place network and third place in terms of subscribers in the US. You know, I think you see the third place network manifest itself in the network outage that they had this year. You know, the data breach, which is driving the stock down today, we actually don't think that that's that big of an issue. A lot of that news was already out just a month or two ago. And so it seems like just the headlines are catching up to AT&T, but we prefer Verizon and TMobile in the wireless space.
And how come, Brandon? Why would you prefer Verizon and TMobile here?
You know, for Verizon, from our perspective, it's somewhat of a turnaround story on their consumer business. They've been losing subscribers in their consumer group for the last several years. They put a new CEO in place in 2022 who's made some operational changes. And now the company's expecting to return to positive consumer postpaid phone net adds in 2023. And all of that is leading to ultimately, a better EBITDA growth profile and really strong free cash flow for Verizon.
And then there's the other one. There's T-Mobile, which has been the winner over the past year in terms of its share performance, and also, both because of its merger, but also organic growth, right? That it's been the one that has kind of been now the second place player that was the third place player that has kind of caught up.
Yeah, no, absolutely. T-Mobile's been one of our top calls in the wireless space for a long time, and it's mainly a function of the organic growth of the business. They're growing EBITDA at high single digits, and we think that can continue. You can't find that type of growth in some of the more traditional comm services space. And all of that growth is really a function of them growing market share. They've had the ability to catch up from a 5G perspective after their merger with Sprint, and a lot of that integration effort is now behind them. So they've been able to capture synergies while also improving the quality of their network, which is a really good combination in our view.
And Brandon, for viewers who are listening right now, Verizon and T-Mobile specifically, what are the downside risks to your call there?
The downside risk is that they don't execute in terms of how investors expect. To the point on Verizon, Verizon has guided us to expect consumer postpaid phone net adds to turn positive. So you want to see progress on that throughout the year. Same with T-Mobile. T-Mobile, we think, is going to be a beat and raise type of story, and we think the stock needs it to move higher. And so for T-Mobile to just come in line, I think that would be a risk to our view there.
And then, Brandon, getting away from just sort of pure wireless providers and telecom providers, you also like Comcast here. And in a recent note, or I guess when you sort of came out with a recommendation to buy it, you called it a tech company stuck in a cable body. Explain what you mean by that.
Comcast has a lot of really interesting tech, whether it goes into the network. And I think their network is by far and away the best network in the business. There's a reason why companies license a lot of their technology. It's because Comcast has spent so much time investing in their cable network. And on the streaming side, I think you can argue that there's a mini trade desk in this business. There's a Roku in this business, which we think is pretty underappreciated by investors.
Do you like it better than Charter, Brandon?
Absolutely. As we look and compare and contrast the difference between Comcast and Charter's spending more capital upgrading their network than Comcast is. Ultimately, Comcast is growing free cash flow and has lower leverage. And those are just a couple of the reasons why we like Comcast over Charter here.
And, you talked about that the market underappreciates these sort of other pieces that are within Comcast. sometimes in these situations, you then get an activist to come in and say, well, you should spin it out so it's appreciated. What do you think is the catalyst to get the market to sort of realize the value of some of these internal businesses?
That's a really good question. It's one of the debates that we have often with investors. I think investors do want to see Comcast split off part of their media assets. Ultimately, I think what we want to see is some of the underappreciated assets, whether it's their Xumo JV, which is effectively like a Roku competitor. We want to see them monetize that better. We want to see losses on their media business, especially Peacock, improve. Comcast is tough, though, because it's a conglomerate. It's run by a family, or the family has majority ownership. And so it's tough to split those up.
Brandon, finally, I want to zoom out a little bit because we came into this segment describing how the S&P Communications Services Index, whose ticker is still TELS, reflecting its telecom roots, is so sort of diverse, right? It has these sort of new telecom or new comm services companies, old telecom companies. Do you think investors should still look at those as a basket and that it is a good time to buy the basket as a whole?
I generally don't take that view. I segment the comm services space between sort of the new tech and the traditional, and I cover a lot of the traditional names. And from my perspective, that's a space that you want to be relatively cautious on. You don't want to just buy everyone in the basket. So, Verizon and Comcast are two of the names that we really like in our basket.
Brandon, thanks so much for joining the show today. Appreciate it.
Thanks for having me.